Welcome, everyone. We want to thank you for attending our new and improved down payment assistance workshop. Kathy Lee, our loan officer with HHOC Mortgage, is going to be our featured speaker. My name is Reina Miyamoto. I'm the executive director for HHOC Mortgage. I'm just going to get us started with an overview about our organization and just an overview also about the presentation Kathy will be giving. So in terms of what we're going to be talking about today, beyond welcome and introductions, we're going to go over some lending terms just to make sure that everybody of different backgrounds, whether you're a borrower or a realtor, will understand what Kathy's talking about in terms of the benefits related to our down payment assistance loan, our deferred closing cost loan, as well as our newest down payment assistance loans that we're going to be featuring. This is the first time we're going to be sharing this with the public, so we're really excited to talk a little bit about that. So today's presentation is going to be about our improved assistance programs that we're offering, as well as some new offerings that we've never shared before. In terms of what HHOC Mortgage is and who we are affiliated with a nonprofit organization, the Hawaii Home Ownership Center. The center provides homebuyer education, coaching, and post-purchase services through a lifetime membership. So if I was a first-time buyer that enrolled in the Hawaii Homeownership Center's program, I could take advantage of their classes, unlimited coaching to help me prepare for the buying process and understand programs like what we're going to be talking about now in terms of first-time buyer assistance. And even after I become a homeowner, I can still come back to the center to attend their workshops, as well as coaching sessions for any homeowner-related topic that comes up. HHOC Mortgage is the Hawaii's only approved nonprofit lender and mortgage broker. We've been in existence since 2009, and we're also approved by the Department of Treasury as a community development financial institution. Some of you may have heard of CDFIs. Why is that important, or why does that mean anything to the community? CDFIs have the opportunity to apply for funding, like we have, to fund products like we're going to be talking about right now. So our down payment assistance loan, our deferred closing cost loan are products that were started thanks to grant funding through being a CDFI. In a minute, we're going to turn it over to Kathy, who's going to be talking to you about the nuts and bolts of these down payment assistance loans. Kathy?
Okay, thank you, Reina. Hello, everyone. My name is Kathy Lee, and I'm the loan officer with HHOC Mortgage. Today, we'll go over the products and also some of the terms that you'll hear as you go through the process of a loan. So the first one here that we see is the LTV, or loan to value. This is the ratio of the loan size compared to the property value. This helps the lenders determine how risky the loan will be. For example, if the value or purchase price is $350,000 and the loan amount is for $315,000, then the LTV is 90% or loan to value. Okay. PMI, private mortgage insurance, or MI, mortgage insurance, is an insurance policy that protects the lender if the borrower defaults, paid by the borrower, and is required by the lender if the first mortgage LTV, or loan to value, is over 80%. If you look at the above example at 90%, you will need to get an MI or PMI. Locking your loan. This means that the borrower is committed to an interest rate and a lock period, and it authorizes the lender to lock the interest rate accordingly. Down payment assistance loan program, or DPAL, is a second lien on the property. It is amortized with a monthly repayment, and it's for a first-time home buyer, which means that you should not have had ownership for the past 3 years. It is owner-occupant only, and the maximum loan amount is $100,000. 3% down, and you'll see a single loan versus a DPL, or the down payment assistance loan. If you look to the left, you'll see the sample of 97% single loan. The loan amount here is $339,500 based on the purchase price of $350,000. If you look further down the list, you'll see the principal and interest payment of $1,524, property tax estimated at $90, homeowners insurance at $35, and the MI or PMI, mortgage insurance, is estimated at $192. The total monthly housing payment for this one single loan is $1,841. Now to compare on this other side, right side, is using the DPAL. You see the first mortgage at 280,000, 80% loan to value, and the second loan or the DPAL at 59,500, which is at 17% loan to value. This is based on the 350,000 purchase price. You'll see that the first payment is $1,257. The DPAL monthly payment is $267. You still have your $90 property tax, homeowners insurance at $35. But here we have no mortgage insurance or PMI. So the total here is $1,649. As you can see, the difference is the single loan payment, the monthly payment is higher at $1,841. And using DPAL, your monthly payment is lower at $1,649. Here are some of the points for the down payment assistance program. Minimum down payment is required, which is 3% of the purchase price. This program eliminates you having to pay for mortgage insurance. The interest rate is fixed, and it'll be lower of the first mortgage rate or 4.5% ceiling. What this means is that if your first mortgage is locked at 4%, then your DPAL or your second mortgage will be 4% also. HHOC mortgage will originate both the first and the second mortgage or the DPAL. Home buyer education and coaching session is required from the Hawaii Homeownership Center. Okay, what are the benefits of DPAL? Well, the main one I think is that no mortgage insurance. You don't pay mortgage insurance. MI is required when the down payment is less than 20%. MI protects the lender, not the borrower, and the borrower will be paying the monthly premium. The second benefit for DPAL is you are building equity faster. What does this mean? This means that none of the payments that you're paying goes to mortgage insurance, but it goes towards the principal of your second lien position. When do I get pre-qualified and apply for financing? Well, immediately before you go shopping for a home. You should get pre-qualified by HHOC Mortgage before submitting an offer. Once you are in contract, you contact HHOC Mortgage and the team, and we will coordinate your first and second mortgage. Home buyer education must be completed prior to your loan approval. What are closing costs? Well, closing costs consist of these fees: appraisal fee, escrow fee, credit report fee. You'll be paying prepaid interest, and you will pay for your hazard or homeowner's insurance 1 year. Our deferred closing costs assistance loan or DCAL program is designed to help offset these costs. Some of the highlights for this program is loan amounts range from $5,000 all the way up to $10,000. Loan repayment is deferred and it has no interest or 0% interest. It requires owner occupancy for the life of the loan. So again, this program is 0% interest, 15-year deferment, meaning you don't make any payments for 15 years. And the loan amounts range from $5,000 to $10,000. So when do you repay the DCAL to HHOC Mortgage? Well, when the loan matures after 15 years, or you sell your home, or when you refinance with equity or cash out. So when do you repay this loan? Well, after 15 years, when it matures, or when you sell your home, or when you refinance for a cash out or refinance with equity. Income maximum is up to 120% AMI, or area median income, or household income. Loan size will be determined by savings matchup, 4-to-1. Home buyer education and coaching session with Hawaii Homeownership Center is required. We also have additional down payment assistance programs for first-time home buyers and repeat buyers. These must be owner-occupied properties. We have one that is within reach, which is with FHA, up to 3 to 6% down payment assistance. It's a subordinated soft second lien position, 0% interest, and it is a 5-year term or 16-month term. Home buyer education is required, no property ownership with limited exceptions. The other loan program we have is within reach conventional. This is a 5% down payment assistance program. It is a soft second lien position with a 0% interest rate and has also a 5-year amortization or 60-month term. 5% grant for manufactured homes, non-repayable grant. Home buyer education is required. No property ownership with limited exceptions.
Kathy, can I ask a few questions about these two within reach products?
Sure.
So if I understood this correctly, it looks like it's a deferred loan, and if I pay on time for the 5-year term, does that mean my whole loan is forgiven at month 61? Is that what it means in terms of that little first bullet for both of them?
That is correct. So if you borrow 6% on the FHA side for the down payment, if you make your payments on time and you don't fall back on anything, then this portion, the 6%, is forgiven on the 61st month.
That's amazing. Thank you.
So here are some samples in comparison for the within reach FHA and for the conventional 5%. You'll notice that the purchase price is $421,053. The base loan amounts are $400,000. With FHA, there's going to be an upfront mortgage insurance premium of $7,000. That's 1.75% of the $400,000. So the total loan amount that you will be borrowing is $407,000. The principal and interest payments will be $2,123.10. There is a property tax of $90. Homeowners insurance is estimated at $100. There is a mortgage insurance premium here with FHA, and that's $266.67. Now you'll notice that the DPAT loan for $21,053, you have no payments there. Okay, so your total monthly housing payment is $2,579.77. And also on the other side, you'll see the conventional loan, purchase price of $421,053, base loan amount of $400,000. Now the area median income is 80%. So the total loan amount is still $400,000 because there's no upfront premium for it. And then you'll see your monthly payments. So your principal and interest on your first mortgage is $2,116.83. Property tax of $90. Homeowners insurance estimated at $100. Since this loan is over the 80%, there is mortgage insurance premium or MI, and it's $256.67. Again, the DPAT loan of $21,053, you'll notice that you have no payments. So your total monthly payments for your mortgage is $2,563.50. So if you look at these two DPAT loan amounts, $21,053 for FHA, and also the same for the conventional, if you make your payments on time for 5 years, this amount is forgiven. So you have earned equity at the end of 5 years, $21,053. Okay, another program for down payment assistance is called a power purchase. This program will require the borrower to put down 1% of the purchase price, and their down payment assistance will be 2% of the purchase price. This means that total down payment will be 3%. Home buyer education is required. No property ownership with limited exceptions.
Hey, Kathy, when it says 2% power purchase grant, non-repayable grant, that means from the get-go that 2% is just gifted to the borrower and there's no loan period or there's no forgiveness required after 5 years like the other one. The 2% is just given upfront.
That is correct. It is an upfront grant, no repayment required.
Awesome. Thank you.
Home buyer education with Hawaii Homeownership Center. Since the loan programs that we've presented to you requires home buyer education with Hawaii Homeownership Center, there are a few subsidies to borrowers at HHOC or the Homeownership Center. Program membership subsidies are available for them through Honolulu Board of Realtors. The member referral through HBR is called the HOPE program. If the realtor refers their buyer to this program, there is a $50 scholarship for the buyer. Also, HSTA members have a scholarship fund through NARIT Hawaii and A&B Foundation. If the buyer does finance their loans through HHOC mortgage, we will reimburse whatever fee that the borrower has paid out of pocket. Funds will be credited to them at closing. So here's our contact information for HHOC mortgage. There's our website, hhocmortgage.org. There's my information and also Hawaii Homeownership Center's information. At the bottom, you'll also notice that there's a loan at hihomeownership.org. You can email us there. If you do send an email through this email address, please note your name, your email address, and your phone number so that we may contact you. So any questions?
I think a common question I've heard, Kathy, is for those who know of the mortgage credit certificate program, can the MCC be paired with any or all of the programs that you went over today?
Yes. So the MCC program can be paired with the DPAL program, the 3% and the 5% DPAL program. I don't believe we can use it with the other three, which is the Within Reach and the Power loan program. But we can use it with the DPAL. So what we would do is we would stack it, meaning that we would do the first mortgage and then do a DPAL second. And if the borrower is short on income, we'll try and use the MCC to boost their income. If they can't, then we'll also use the DCAL if they need funds for closing costs.
So DPAL is the loan where you have to make, there's interest and principal repayment each month. And DCAL is a deferred closing cost loan between $5,000 and $10,000.
Yes, that is correct.
Thank you, Kathy. That was a great presentation. We thank everybody for attending our session today, and we hope that you'll reach out to Kathy if you have any questions, especially if you just heard about mortgage credit certificate and you're not sure what that was. We will be happy to do a walkthrough about that, as well as answer any questions about the products she went over today. Hope you have a nice evening, and we'll see you again soon. Bye.
Thank you. Bye.